If you had just bought and held, you would have made a whole lot more money than trading in and out of this position 282 times over this period of time.
which is
So
brutal.
yeah, it's brutal. The drawdown for that performance in that 5 year period was likely larger. It looks like, if I had to guess, that looks like about a 60% drawdown on that blue line. So it means that, yes, while you would have made net more in that position over that period of time, you actually took less risk with this trading strategy because the drawdown was a little bit better. You're not experiencing as big of a reduction in your account balance. If you had bought and held during that period of time, and let's say you have a $100,000 account, right? And you watched your account go down 60% and you've got $40,000 left in the account, there's a really strong chance that you might have pulled the plug on that. So you have to decide on this trade off between the buy and hold approach and the risk managed approach of potentially getting less of a net return, but not experiencing as much pain in the process.
Interesting. So, but that only works if you put 100,000 in right at the start. If you bet it all at the beginning of the 5 years.
Sure. Yeah. All this simulation is based on an imaginary amount of money. This could be
Mhm.
$1,000 that you originally started with, but the analysis you're doing here is what would happen if I had started 5 years ago with $1,000, and would it have been better for me to just buy and hold this position, or use this trading strategy to get better returns and manage risk better?
Also, I'll end on this here for the max drawdown. Some of these factors matter not because, for example, for prop firms, something that I think we're going to get you to trade eventually. Prop firms, you're trading essentially someone else's money, right? And so you don't have the benefit on a prop firm account to be like, I could have bought and held this. The profit that you're making off of that, which is their appeal, you're trading someone else's money, you're getting the percentage of the profit. And so you might not necessarily need a strategy that's beating buy and hold because that was never an option for you with a prop firm account.
Right.
You were doing that to accumulate profit that you wouldn't have had otherwise.
The prop firm
Um,
needs you to take specific types of risks, and a buy and hold approach is too big of a risk for them. They want you in and out of the market quickly.